Welcome to Friday's market wrap up here at Top Gun Options. Matthew Buckley, call sign Wiz, and what an incredible week it's been. First of all, it's interesting shooting before market open here. I look like I'm in the movie Ghost here. Hopefully, I'm not. Let me pinch myself. A lot to talk about. We still have to keep our eye on the strategic picture. This is why you're at TGO, or at least watch the free videos, and eventually you're going to be a member. Israeli jets bombed a military facility, military airport, actually, in Damascus. You got to keep this stuff on our radar, even though we're looking at tweets and Trump and confirmation hearings and crazy stuff going on here domestically. You got to keep your radar search wide open for stuff around the world that can literally pop up on a slow news day and put the futures down 300 points. Something like this is very interesting. Approximately 8 Israeli aircraft, I don't know how the Syrians found that out, bombed an airport after a rocket or mortar attack that hit, I think, northern Israel just after midnight. So why does this matter? Obviously, Syria could be wiped out in the blink of an eye by Israel. But it really can't because, as we all know, Syria is a Putin puppet state, and we've been battling more or less Putin over Syria for the past couple years, literally almost to the point of our U.S. fighter aircraft engaging Russian aircraft over Syria, which might go bump in the night, but we can talk about that over beer. So keep that on your radar. It's really not affecting the futures. I keep an eye on this stuff. Obviously, that's my background, and my phone lights up, and we talk through this with some of my buddies who are still in active duty or were retired, because it can impact the market. The other day, this week, I think it was this week, again a long week, one of our guided missile cruisers or destroyers going through the Straits of Hormuz had to light up some 50 cal in front of 4 Iranian patrol boats, folks. That's the Strait of Hormuz. I think my math could be dated from when I was in there. 70%, 67% of the world's oil flows through this little choke point. That thing shuts down because Iran decides to string a mine line across it. It oils at $300 in the blink of an eye. So I'll keep an eye on this stuff for you. But let's get operational and tactical here. Bank of America, a little bit of a small beat, but a miss in their FIC. Now, if you haven't heard that term before, you're not a member here. FIC is fixed income, currency, and commodity. So that's kind of their trading department. I really don't care. First of all, I don't care about Bank of America. It's not a financial I really like or follow that much. It's down on the street corner. Wells Fargo was a miss and a miss, I believe, on the top and bottom line. Again, not one that I trade a lot. I do follow it. I follow Wells Fargo more than Bank of America, mainly because Wells Fargo is more of a canary in the coal mine for the economy. Wells Fargo is on the corner, mom and pop small businesses, home loans, auto loans, all that type of stuff, mortgages, more of a heartbeat type of bank. It's not a JP Morgan, which, you ready? Knocked it out of the park, top, bottom, blew the doors off of it, as I predicted. Taking a look, I'm going to be sending out another urgent alert today, but here's 2 of our JP Morgan urgent alert trades. This one's at all the way out to Jan 18. This trade has another year to work. It's up 20. This is yesterday's close. The market's not open. It's up. It will be up over $25,000. And I think this trade is on for 7 months now. Do the math. How do you like making, what's that, over $3,000 a month on average in a JP Morgan trade? And I put this trade on a month ago in the middle of December, or right after the election. Financials have run too far. This trade's up $5,500. It'll be up about $6,000 at the open. And this is out to Jan 19. Do the math. How much more does that trade have to work? We closed a JP Morgan trade in our accelerated retirement portfolio last month, a Jan 17 trade. So I put that on about 2 years ago, a year and a half ago, and it was up $35,000. That one averaged $2,300 a month. Folks, these financials have room to run. Back to the Wells Fargo Bank of America misses. The Wells Fargo miss I still kind of expect, because we're still trudging out of this Obama Vietnam economy that we've been in, even though he really strains himself to pat himself on the back for the greatness he's done with jobs. Waiters, waitresses, hotel staff, stagnant wage growth, labor force participation rate at Jimmy Carter-ish. He doesn't put that out there, but he just puts a top line number out there. So I liked JP Morgan, still a buy. We'll talk about crowded trades here in a second and what that could mean. But I think JP Morgan's still a buy here. I think Goldman Sachs is a buy, especially with them leveling off. Let's take a look at JP Morgan because it's got a classic. I love this chart. Flat into the election. Topkin Options was one of the only financial firms to say not only is Trump going to win, the market's going to rally 5%. Remember what Citi said? Big old Citi, another bank I can't stand. Not only is Clinton going to win, but the market's going to rally 5%. If, God forbid, Trump wins, the market crashes 5%, and he's not going to win. They were wrong, we were right. And we were right to the tune of what I just showed you. So rip your face off rally after the election. Okay, is this for real? Oh, yeah, Trump is for real. He's not that much of a lunatic. He's appointing some good folks. He's appointed 3 Goldman Sachs alumni to his cabinet and his senior staff. And now we're kind of leveled off saying, hey, what's next? Well, what's next is today and its earnings, and they're looking good. So I think this chart just keeps going up and to the right. Could be completely wrong. We could always have a black swan event, but I'm telling you now, financials have been a jack in the box, and there's been a brick on top of it called Obama with financial regulation, with low interest rates. Trump's going to knock that brick off, and here come the financials. Higher interest rates, less financial regulation, more lending, and here we go off to the races again. Hopefully not another 2008 financial tsunami, but again, something could always reach out and touch us. Yesterday's sell-off, let's talk through this. First of all, it shows you how crowded trades can turn on a dime. What's that mean? Financials right now are a crowded trade, meaning for all the reasons I just told you I'm bullish on financials. The press conference was Wednesday. God, it was a long week, and I'm still getting over the crud. The market, quote unquote, expected him to have a press conference saying again for the 80th time that he's going to have lower corporate tax rates, lower personal tax rates, less regulation of Wall Street and growth and infrastructure spending. He said it a quadrillion times, market, but you wanted to hear it again. Instead, he got into he wrestled. When you wrestle with a pig, the pig has fun and you get dirty. So the CNN pig press conference kind of shocked the market a little bit. I think we're inoculated now to that. I could be wrong, but I think the market's going to get the fact that we're going to expect more of this stuff. If we expect him to say something at a press conference and he ends up slinging mud at people, he hasn't changed his core what he wants to do as president. So these could happen again, and the market could still hate it. But I think once we see this happen once, the market's going to be inoculated. But yeah, it's funny because it's a crowded trade now. It wasn't before November, before I was in there. I told, and you can, once you become a member, you can listen to all our recordings, and you can ask your fellow TGO members once you get on board, did Wiz say all this stuff? I absolutely did. In the fall, I was a little downbeat because everybody in the media was lying. Hillary's going to win. Don't even go out and vote. And the economy's going to be great. I said, that's a lie. Trump's going to win, and the market's going to have a rip-your-face-off rally. Then these trades got crowded. So we were in them first. So call them crowded trades now. They were dead trades before. And even the XLF, the financial ETF, would be something to look at here. Oil, I believe, is stable. Today, I really didn't get a chance to look at my oil stuff. It's not driving the market around as much as it this time last year, like a wheelbarrow. Remember December and January of last year, holy crap, crude at $26. But I really... I'll keep an eye on oil. We talked about the XLE in depth yesterday in my primary live trade brief and a couple potential trades there, but nothing big on oil. Other than that, I got to get going. Market's going to open here in about 34 minutes. I have a weekly options live trading session at 1 o'clock today. If you want to take a look at whatever we do here at TGO, you can take a couple test flights on our homepage. Go to topgunoptions.com. Scroll down to the ski area looking stuff, beginner, intermediate, advanced. We have retirement portfolios. We have short-term portfolios and long-term at the Jan 2019, and then we have weekly options trading as well. So take a 2-week test flight to see what we do here, and you won't be let down. Okay, I got to run. Happy hunting. Make sure you hedge. Have a, how do you say that? A great Martin Luther King Day. It's like Happy Memorial Day or Veterans Day. It doesn't make any sense to me. So have a great 3-day weekend, and I will be back with Tuesday's market sit rep next week. We'll see.